Well, good morning, traders, and welcome to this week's Market Analysis Madness with me, your host, Francois. I am the market analyst for HFM for the southern part of Africa. Before we do get into this session, kindly just familiarize yourself with the risk disclaimer currently being displayed on your screen. This disclaimer, in short, basically just states that everything that I will be sharing with you during today's session is purely for informational purposes only, and at no point in stage during this session will we be providing financial advice. That being said, welcome to today's session. Thank you so much for joining me here today, and let's jump straight into it to have a look at what is planned for us during the upcoming week. Now, if you have looked at our socials this morning so far, you would have seen that we have posted the weekly planner, and we have quite a busy week ahead of us this week with data releases from both the US and UK, as well as even China, releasing some really big economic data this week, which will definitely be moving markets during the upcoming week. So we are kicking things off tomorrow with labor data from the UK, as well as US PPI data. So that's our producer price index data. Then on Wednesday, we will be seeing the release of the US CPI. So that is our consumer inflation report that will be released from out the USA. We also have the jobless report claims and continuation claims being released on Thursday, as well as then on Friday, the Chinese industrial production data that will be released. So how can all of this affect us in the week going forward? Well, let's just have a look at a couple of things here, and let's have a look at a few discussion points going into the week ahead that we have basically already planned out now, and see what we are able to trade. Now we just need to understand better at how this can affect us as traders going into this week. And we're also going to have a look at a couple of charts just now as well. So as we stated, investors will definitely be focusing on that US PPI and CPI data for additional information on inflation, as this will give additional guidance into what the Fed will do going forward as well. If we see cooling inflation, this will add to the bias that there could be rate cuts much sooner. Now, looking at our CPI data, so that's that core inflation data that is due on Wednesday, we are expecting a reading of a 3.6% rise, which is slightly lower than our previous reading last month. And this could indicate that softening and cooling inflation, which could lead to that decrease in interest rates. However, if this comes out higher than expected, this could spark a lot of additional volatility within the market, and this could lead to additional movements downwards, especially in pairs such as our Euro USD currency pair, our gold pair, even our indices such as NASDAQ, S&P 500, and Dow. As I stated in my market outlook this morning as well, we are seeing a bit of caution ahead of all of these various reports that are being released. So let's jump right into it. Let's have a look at a couple of charts going into the session. So let's start looking at what we can start expecting from our trades this week. Now, as I also stated, we will also be seeing the retail sales data being released. We're also seeing some earnings reports released from Walmart, as both Walmart and Home Depot, sorry. And this will obviously assist us in gauging the consumer health within the USA as well. And we have seen that a lot of strong earnings so far during this earnings season has boosted market confidence. Now, looking at Euro USD here at the moment, we can see that we are currently trading just below this trend line, which is also currently acting for us as resistance. Now, if this holds up, there is also a rough inverse head and shoulders pattern being formed here at the moment as well. And that would require a break of a neckline around this area here for a buy higher. Now, that will also then break that actual trend line there from the top. So that breaking point is sitting at 1.0789. Now, a break and a close above that could trigger additional upwards momentum all the way up to our next resistance, which is sitting up here at 1.08600. Now, if this resistance obviously gets respected and we can push down a little bit lower, I would wait for a break below this relative area over here. That is also the level that we were trading from last week, and we had quite a few nice trades from off that level in the last week because of the fact that we were relying on these previous resistance points over here. Now, that gave us quite a few really nice trading opportunities during last week's trade. And again, if we can push a little bit lower and now get a break back below that 1.0754 level, that could lead to a retest back down at our support sitting here all the way at 1.07 flat. Now, traders, please remember that if you do have any questions for me, pop them for me into the comment section below, and I'll definitely look at answering them for you during the course of the day. Moving over to our GBP USD pair. Now, as I stated as well, we are looking to see additional employment and inflation figures from off the Bank of England during this week, and that could also guide markets on what to expect from the Bank of England's June interest rate meeting that is also coming up. So if we do see additional signs of moderating wage growth, this may strengthen expectations for a rate cut from of the Bank of England. Now, our GBP USD pair is trading in a relatively tight range here at the moment, and a break below 1.2512 could lead to some weakness within our pound sterling and see a push down back to this previous support sitting here around 1.248. However, as we are currently also seeing there is some respect going on this trend line here at the moment, there is still a little bit of a push higher. I would just personally wait for a break above this resistance, which is at that 1.254 level, and a break above and a close above that could lead to additional rally all the way up to our next resistance up here, which is about 24 pips. So it's about 240 points movement. And that is sitting around that 1.2564 level. Adding on to our US pairs, we can also quickly have a look here at our NASDAQ pair. And again, still trading within a relatively tight range. But as we can see, most of our moving averages have now all crossed. So for me, I'm using the 21, the 50, and the 100. So all three of those have crossed, signaling some nice, big, bullish momentum. If we can have a look here as well, this diagonal the trend line that we have there that also acted as resistance has also now been broken and retested. So again, if we can now get a close above this level over here, which is sitting at 18,240, close above that could lead to an additional rally all the way back up to this resistance level that we have here, sitting at roughly about 18,400. Now, before I will start looking for any short positions, I would wait for a bigger move downwards and a close below our support. So that is sitting at 17,875. A close below that, that would for me signal a change in direction. At this point in stage, I'm primarily looking for additional buy or additional long positions on this. So that is that first shorter long position, and then a break above our resistance, which is sitting at 18,480, could signal additional bullish momentum on this specific index as well. Definitely some very interesting potential moves coming up in this week ahead. Moving over to gold. Gold has seen some relative amount of weakness from Friday all the way to this morning. Sorry about that. So some downward momentum on this as well. And now currently trading within that support zone that we have here. Now, I am just waiting at the moment for a break and a close below that 2,346 level. As you can see here, very nice previous selling points as well as when it was additionally broken, there was some nice buying momentum from that level as well. So just waiting for this to push slightly lower and then close below that. And this could lead to an additional decline all the way back to this previous support sitting at that 2,330 flat level. Now, if we do break higher and we break back above our support level, I would literally just wait for a break of our trend line here as well. And that would require a slight move higher with a break above 2,355, which could trigger an additional bullish rally once again, then on this specific commodity. Last but not least, let's quickly have a look at oil for today. Last week, trading in that relatively tight range the entire time. It took quite some time for it to actually break out of that bearish flag or that descending flag pattern that we had. And afterwards, it did get some nice bullish momentum back up to our resistance, from which it just sold off again on Friday. Now today, bouncing very nicely on that support. And again, just waiting now to see if we can get a close above, I would go as far as to say about $78.7 a barrel, which could then lead to a retest once again at these high points sitting just below that $80 a barrel level. Additionally, a break below this 50 fib level, which is sitting at $77.7 a barrel, could lead to a further decline all the way down here to $76 a barrel. Now, if we do look at the current fundamentals behind our oil pair as well, we can see that both Brent and crude futures over the last week, as you can see on the chart as well, has shown very minimal changes and minimal movement. This is primarily due to that potential expectation for a prolonged higher US interest rates, which is obviously weighing down oil as well and putting some pressure on oil. However, China, on the other hand, has increased oil imports, which has offered some support to the oil price amid the global economic concerns. So again, just some really nice potential movements within the markets coming up this week. So again, if there is any questions that you might have for me, please feel free to pop it for me into the comment section below, and I will definitely do my best to answer them for you. Just one last time before I bid you all a farewell, please just remember that everything that I was sharing with you during the session is purely my opinion on the markets and is to be used as information and not financial advice. So may you all have a fantastic, blessed day further and a very profitable week. And I'll see you all next week during our next Market Analysis Madness video. However, there will be a few live sessions during this week as well. So I look forward to seeing each and every one of you during those sessions as well. Have a great day further. Thank you so much. Bye-bye.